What's up, traders? Happy Friday. Yeah, just to start off with the topic, all I read about this week is manipulation. There's manipulation going on in Bitcoin right now. I don't know who they're talking about, if it's Wall Street or all the people that have pumped in the past. But if you want to grow your social media following, all you have to do is just say that, and most people buy it. It's great engagement bait, but the balance that I always try to strike is like, okay, am I a trader or am I trying to be a social media influencer? I'm not trying to be the latter at all. I'm a trader first and foremost. And so it's pretty clear to see how the price of Bitcoin is being manipulated. I mean, as I've kind of pointed out, all you have to do is just draw a level at the 2025 open, like the opening candle, and you can see pretty clearly what it's been doing all week in the past in this down move. There's a lot more to it that I'm going to get into, but it's amazing to me how all the pumps and the inflows and the ETFs and the corporate Ponzi's that have pumped Bitcoin up to the price it is now are just adoption. And every time there's a dump, it must be manipulation. Simple answer is more people are selling than buying. But we'll look at that, and also we'll look at some good trades this week in stocks. UNH, one of my favorites. That's I've been trading that for a while this year. One of the great stories of the year. Had a great perfect setup, 50% retracement with a spike, along with some other things I've got on the docket here. So yeah, hang around till the music's over, and we'll get into it, as well as the symbols that you guys have to look at, because that's what we're here to do. We're here to generate opportunity. So hang out. I'll be right back. Let's speed that up a little bit. 7x. So the blue and orange line, and I'll show you in here in just a second what this is. It is the opening price of 2025. And it's just been sort of uncanny how price on the lower time frames is just, and no one seems to have really noticed this. All they're focused on is, it seems to be on social media, how every single down move is manipulation, as if there's some nefarious cabal of people that are trying to keep the price down. I've even heard the story that Bitcoin should be at 250K now, if not for Sam Bankman-Fried selling fake Bitcoin back in 2022. And to that I say, if you disagree, if you think that the price is fake, you're more than welcome to go buy Bitcoin from somebody at $250,000. I'm sure they'll sell it to you. But you're not going to be able to sell to somebody else at that price right now. The price is the price, is the agreement of every single participant in the market at this point. And that price happens to be 90,000. What are you at? 90,332 right now. That is the price. And a lot of people talk about how, and we're going to look at I want to go do a little history lesson back to the last cycle, because more and more people are finally coming around to the idea that I've been saying for the better part of the last year or two, really since the beginning of the bull cycle, that Bitcoin has a price cycle. It's a 4-year, 5-year, whatever it is. It has a cycle of bull and it has a cycle of bear, just like there's seasons of the earth. What causes it? The happening, maybe. Who knows? Who knows? It just has happened before, and it seems to be happening right now. And we can study the past. Obviously, it's not going to repeat, but it is going to rhyme to understand. But the big thing that they talk about is the October 10th, Friday, October 10th. Trump put out some kind of tariff tweet, and that's really the manipulation, and a bunch of people got liquidated. And that's evidence that there's shady forces out there trying to take everyone's Bitcoin. Oh, but you know what? I have zero sympathy for people that enter the free market, which is what crypto at least used to be, a lot more free, and use leverage and then lose. You just discover what risk is. That's all there is to it. But here's the thing. When you have liquidation events that are manipulation, if you've been trading long enough, you've seen them. What you should see is a V-shaped recovery, a liquidation spike, a stop run, and price should recover very quickly. But if you sit here 2 months later and you're at a lower price than that liquidation, that wasn't manipulation. That was price action. And we're going to look at something historically in just a second. But if you're just joining, welcome. We're going to look at Bitcoin primarily today because that's the topic. But I'm going to talk about the stock stuff that's going on, particularly with UNH a little bit later, and also want to use this as an opportunity to talk about the FOMC that happened this week. Rates, of course, went down. That's actually very interesting in itself. That Bitcoin, which is interest rate sensitive, did not respond very positively to this news. In fact, it's exactly what the market expected, and the price stayed contained underneath that 2025 opening level. What am I talking about there? Well, hold on. Let's just clean everything up. We'll start from scratch for the live stream here. Okay, we go to the 1 year, the 12-month, and there is what Bitcoin looks like on the 12-month. Okay, and so there's the open 93,455. That's the opening of 2025. And then we go down to the 30-minute chart for the last 2 weeks. Let's make it do a 1 hour now. And we can see what's happening. It's a battle to see if Bitcoin will close positive or negative this year. And this week with the FOMC, it was right here on Wednesday, about 2 p.m. What did it do? It came up and tested it and held beneath it. Overnight, same thing. That's the key level. That's the deciding level. Is Bitcoin going to be positive for the year, or is it going to be negative for the year? That's going to be what the news is going to be reporting on January the 1st, once we know the answer. But already, that's the thing about price. It doesn't require, lizard people manipulating it with the market order book and stuff like that. This is a self-fulfilling prophecy. People can see this level. Traders see this level. They're acting upon it in mass. Like, you're the market. I'm the market. I just don't get how it's useful. Here's what I'm talking about. It's stuff like this. Hang on, where is it? Um, it's stuff like this. I just find this, like I said, this kind of stuff is great for engagement. Like, if you want to grow your Twitter following, if you tell people that what they're seeing on the chart isn't real, uh, this is just a big desk hunting liquidity, uh, a large player to accumulate before the real move begins. I mean, this gets tons of engagement, tons and tons of engagement. 26,000 views, because people want to hear something like this. They want to hear that, oh, it's just more people are selling than buying. They want to hear that it's some big manipulation by some bad person, and eventually it's all going to work out and everything's going to be okay. Well, I don't think so. I do not think so. And last week, I did a further recap on my now closed MicroStrategy short, and I was pulling up the chart and I saw something that I can't unsee about it. Okay. Hey, what's up? What's up, T? And by the way, guys, if you're just joining, what I do in the last part of the live stream is I look at your symbols, the things that you guys want to look at, give my opinion. And oftentimes I come up with some good trading ideas from it too. So if you got them, put them in the chat. I'll get to them in the latter half of the stream, and we'll take a look. I have some very specific things that I look for. I'm very simple with my technical analysis. Very, very simple, and it works very, very well. You won't see a bunch of crazy indicators or anything like that. You're just going to see horizontal lines and primarily false breakouts. Those are my favorites, and they work pretty well. And we're going to talk about the UNH trade here in just a little bit. Case in point, we got to talk about the Ethereum spike trade as well. But the thing that I could not unsee, and this, I was talking earlier about how I try to square that circle between being a trader and then being like a person that talks on social media. As small as my intimate group of friends are, as a trader, I'm always hedging. By the way, this doesn't have anything to do with Bitcoin. I'm not calling Bitcoin a bubble. I'm calling MicroStrategy a bubble. I'm always trying to hedge what I say because I'm always trying to hedge my positions. I never want to be one of these Bitcoin maxis just so absolutely captured that their idea of a diversified portfolio is 60% Bitcoin, 30% MicroStrategy, 5% Marathon, and 5% MicroStrategy prefers. That being a diversified portfolio. That's all you have for your retirement. I don't want to be one of those people, but those are the kind of people that go on, or at least they claim to go on social media and talk with absolute confidence. Me, I read Trading in the Zone by Mark Douglas. When people ask me what books to read about trading, that's one of the ones that comes up. The TLDR of every single chapter in that book is anything can happen. And so I'm always mindful of that, because you can't just stay in a position regardless of what the price action is telling you, or else you're going to lose. And so you have to have that mindset as a trader. But when it comes to speaking about things, you have to speak with absolute confidence so that people will, believe and follow you. So you know what? Once I am highly convicted about something, I'm going to just say it. And let's start with MicroStrategy, because this needs to be said. So now, what I lament is I can't go short more MicroStrategy now, because it's already kind of played out down to a support level. That support level being 165. That's the volume profile level since before the big yeet. And around November, that's when I started talking about and shorting MicroStrategy, because Michael Saylor is a con artist. He is a grifter. He is defrauding people. He is using Bitcoin as a marketing tool to do a out in the open Ponzi, essentially. It's not, and people say, "Oh, it's not a Ponzi." No, you're getting money from new investors to pay off old people. You're doing a Ponzi. You're just backing it up with Bitcoin. You could do it with any asset. You could do a Ponzi based on oil. You could do a Ponzi based on another stock. You could do a Ponzi based on gold if you wanted to, but you just happen to be doing on Bitcoin. taking the money from all these faithful crypto people that really believe in it as the next money and taking their money from them. It pisses me off. I've been running a Discord for about 5 years, so it's about COVID era now, and people impersonate me and they try to get people to buy into strategies. I can't stand people that sell indicators, they sell AI trading tools and stuff like that. I hate scammers. I hate them. And back around November, you can go back and I can probably pull it up here, but I really hate to waste the time for that. Let's see, where can I find? Can I find my, let's see, history? Oh, yes, it's this right here from November the 25th, 2024. It was this right here. Hold on, let's see.
$9,500 yesterday, but MicroStrategy, the largest corporate holder
Holder
of
of Bitcoin was down 16%. That fall on
So
The Bitcoin premium is the ARR Bitcoin versus the US dollar. 2 weeks ago, we did 4.6 billion of an ATM.
note the buzzwords that he's using here,
We ran
okay?
at a 70% spread. That means we made about a $3 billion BTC gain in 5 days. That would be about $12.50 a share. But over 10 years, that's $336 billion, or about $150 a share, just on that 1 week.
This week we did a convertible bond, $3 billion at an 80% BTC spread. That's a $2.4 billion
gain.
Sorry about that, echo.
That's about $10.
Can you hear it now?
share,
Yeah, you
but
should be
over
able to hear
10
it.
years, that's $125
And I can't
a
hear. I
share
turn up
to
a
the
bunch.
shareholders.
The key thing that I
think the
noted when I
thesis of the
heard
shorts
this
is
interview
if the premium and the
was
equity
good. Thank you.
disappears, we
The
can't
key
make
thing that I
money.
know when I heard this
What
interview
they
was
miss
the
is
talking
that
about that. We're
when
running
we
a
actually
Bitcoin
borrow money
reactor.
at
By the way, his voice
6%
is
and we
weird.
invest
This
it
is
in
a weird
Bitcoin,
dude,
Bitcoin
okay?
goes up 30%.
And not to mention
And
he
by the way,
was,
Bitcoin's going up 60%.
the
We're
SEC
getting
got
a
him for
90%
fraud
BTC
back in
spread,
the
but it would be
.com boom.
80% BTC
But this
spread,
is November of
which
last
means
year
the
when
$3
it
billion
was trading at over
fixed income
$400, and
raise in
everyone was
preferreds or
holding
bonds generates the
meetups and
same
talking about how they had to
$125 a
buy
share
into
and $30 billion over 10
MicroStrategy. Do it on
years.
leverage. This is going to be the
Once you
best bet ever.
understand that,
By the way,
you
look
have
at
a
that.
different view of the
Bitcoin,
company.
$98 a year
So
ago.
what do you say though to those
Where
who
are we
say
now?
there's a risk here
Huh.
because this is
Anyway.
effectively a levered Bitcoin position?
It's just the things
And
that he was saying, using all these TLAs, 3-letter acronyms, and talking about volatility and spreads and all this. I mean, I've been doing this. I've been studying options. I've been studying markets. I've been studying finance for over a decade now. And he was saying some things that I understood that were sort of weirdly put in context, and other things that were just made up. And it immediately hit me. This is the age-old scam that plays upon the adage: if you can't dazzle them with brilliance, baffle them with bullshit. I had to short this stuff. And so now here we are, a year after that. When was that? Now, I've been accused of having, that was here. That was here. That was right there near the high. Okay. Now, I've been accused of having SDS. What is SDS? SDS is a disease that I've been diagnosed as having by Bitcoin maxis as cellular derangement syndrome. Now, of course, we know what that's kind of alluding to. And you know what? I'll take it because I hate scammers. What I really have is scammer derangement syndrome. Cannot stand people that tell others to mortgage their house, sell their kidney to buy their stock or the underlying that's going to make them richer. I cannot stand these kind of people. Cannot. And I will call them out. And as I said last week, when I was talking about it, doing more of a post-mortem of the trade itself, which I unfortunately had to be a good trader. I had to close it because sure enough, it did and bounce off that support at 165. But then when I saw this, I put it on the monthly. By the way, yeah, this is where he blew the company up 20-something years ago. When I saw this, I immediately thought of this. Even better if you look at it on the weekly. You have me change the color of that. Do, 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 do. There we go. Now we got a red line. Once I saw it, I could not unsee it. And you have the takeoff, the bear trap, the new paradigm. That's the Bitcoin volatility reactor. That's the how many of you guys remember infinite money glitch? I remember when I heard that, I said, the person that told it to me, I was like, that's funny. That's funny. Infinite money glitch. That's good. Like, you're serious? They were serious. They were infinite money glitch was new paradigm. I like it in this model here because basically it wants you, this model is preparing you by looking at it to say, okay, pay attention for new sayings, like and that's what it was. It's amazing. And of course, then when it comes down, it's like, no, denial. And then there was a return to normal. And as I said, this was very painful for me in my short. This is where you doubt yourself a lot. Don't even open the platform. But now what do you have? You have capitulation. We're not even to the despair point. And we're not even, definitely not to the return to the mean. But once I saw that, I was sure. Now, the problem with making any money off of it now is that most of the money has been made going short the CNBC hype, essentially, when they had him on and everyone was starting Twitter groups like Irresponsibly Long MicroStrategy. Okay. But we can look at a lot of different bubbles in past, like pot stock, TL, RY, to understand what's going to happen in the future. So this is where I talked about earlier this week. Essentially, you have the first bubble pump, and then you have the despair. And then at some point, randomly in the future, you're going to have this run up, and people are going to resurge hope. And that's absolutely going to happen at some point in the future because this is based on Bitcoin, and Bitcoin goes through emotional cycles of hype and malaise and things like that. So at some point, randomly, unpredictably in the future, MicroStrategy is going to do a quick recovery. And then everyone that I've said that this thing is a bubble is going to come back to me, and they're going to say, ha, 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 ha. See, we bought. Look at us. We're so smart. And I'm going to be like, thank you for letting me know. It's time to go short again. Now, it's not going to be nearly as much as we would have gotten going short the bubble, but that took a lot of bravery and it took a lot of pain to sit through it. But then what's going to eventually happen is you're going to get another slow grind down into oblivion. The other quintessential example of that is, of course, GME. Who remembers GME? Go and look at all these bubbles that have happened that people forget about because if they were in them, they don't want to see them ever again. But there's something to be studied in these charts. They have a very common pattern. Why do all these different things for different reasons have common patterns? Because they're all traded by humans with fear and greed emotions. And so what you're going to have is you're going to have the big run up. You're going to have hope dashed, hope dashed, hope dashed. And these are going to come at random intervals for random narratives. And it's going to be really hard to predict, really hard to trade. Almost not even worth it, but that's what's going to happen in the future. Absolutely confident of it. And I wish the people the best that think that this is otherwise. I think what I would say to them is, if you're already in it and you really believe in it, then okay, just stop adding. Find something else. Come on, like really. If this whole Bitcoin thing is going to go to 1 million, okay, then if you're buying and you have some already, you probably have enough, right? Because we're not just playing for, like a 150% gain, right? We're playing for Bitcoin to 10x, 20x, whatever the number is from here, right? So you're going to be rich either way. Like, does it really matter if you have $10 million or 50 million? Like, let's just use some logic, okay? Like, how rich do you need to be? All right. Maybe it's a silly exercise because the answer for most people is always more. But just let's look at some other things. Let's see how this goes. Or I can just tell you how it's going to go. It's very clear to me what Bitcoin wants to do. It's going to hold this level. It's going to close below it. We are in the 4-year cycle, and in the past cycles, price has gone down either 95% from the high, 85% from the high, 65% from the high, or excuse me, 75% from the high. So let's just presume that this is going to be the most moderate of the pullbacks, and we're going to have a moderate pullback, the least that's ever happened, of 65% down. So 65% down takes us to where? It takes us to about 43K. What happened at 43K? What happened here? I talked about this. Just bear with me, guys, because I'm going to add one more thing to this analysis that I talked about last week. That is the ETF. That is where the ETF launched. All the way back to where the news is going to say ETF buyers now in the red. And then we'll see what happens at that point. But there's another key level as well that's going to happen first and foremost. And that's going to be, of course, the 50% level. That's going to be around 70. And going back to MicroStrategy, they just did another purchase earlier this week, I believe, to try to shore up some optimism. Brought their buying cost up. Their average cost is going to be about 74. I think it is 74,000. And so when you start looking at these levels, oh, and by the way, it's also, I think, let's see, where is it? I think there's also a volume profile level from that past range. So you have all these different levels of support. Nowhere else except below. Price is going to try to go test those supports. And so that's what's the most clear thing to me. Then, of course, if we bring up Ichimoku analysis, we can see that it's still technically bearish. Excuse me. It is still technically bullish because we're still constrained by the cloud. Change that back to yellow. But if it can get on the bearish side of the cloud at any point in the near future, let's say basically a few weeks from now, a month or two from now, it's going to get on the bearish side, and that's going to be a weekly bearish trend. So I actually think that possibly both things can happen. It can close December to make the year negative. It can pop up most likely to 103. And that's when you're going to start looking for people on social media to be the we're back. And that's going to be a good one more opportunity to possibly short this thing for the final leg down. So that's what I'm looking for in this case right here. But I mean, the real thing that I've tried to make people pay attention to, which we're going to talk about in the UNH trade in a bit, is a false breakout. There is no better indicator of a reversal than a false breakout. And even did a false breakout here. When you just don't have the narrative that I keep hearing from people is that Bitcoin is a beach ball being held underwater. Well, what happens when you have a little prick like that, a little line, a little candle that goes up, is it pops that beach ball, people stop buying it, and the air deflates out of it. That's what you can think about here. It's not a beach ball being held down. It's just they were pumping it up, and then someone let the air out, and their breakout did not happen. You want to see a breakout? You want to see what a breakout should look like? One of my favorites, Eli Lilly. This is a stock that did a great pullback in August. This is what you want to see on a breakout. Big green dildo bar that punches through, closes solidly above a past all-time high. That's what you want to see. That is a key level. A little more to talk about Bitcoin here. So let's talk about that manipulation here. Let's talk a little more. Let's actually talk about manipulation, okay? So this is the big manipulation that's got everybody mad in this point right here. It's Trump tweet about tariffs. Well, I don't know like how much Bitcoin is made in China. I thought they banned it, but apparently tariffs affected Bitcoin coming off that all-time high and doing that false breakout at 126. All right, so keep that bar in mind. In fact, let's just do this. Let's do a side by side. So that was October. Bring that back up. There we go. Okay. Keep that bar in mind. Look at that. Big, red, angry bar. I am blessed and cursed with a good memory, especially when it comes to markets. And I remember this bar this bar, which was December the 4th, 2021. Now, bear in mind, this is what it looked like prior. This is where we were in the 2021 cycle. Okay. So there's still like, we had a little, drop down, little first pullback, which held and then went on to make a slightly higher high. Got everybody really excited, just like now. But what was this bar that happened on Saturday? Manipulation, everyone cried. Because it was Saturday, there was low volume. This is before ETFs, by the way. We're going to get back to that in just a second. But this is before ETFs. This is before, I think the corporate Ponzi's with MicroStrategy have started. This is Saturday. It's low volume. There were already Bitcoin ETFs, by the way. They were just based on futures back then. And what happened was Friday, the day before, had been the U.S. jobs report. The U.S. jobs report has showed that non-farm payrolls had come in, showing that employment was up, and that was one of the items that the Fed was looking forward to in order to decide if they were going to raise rates. Remember, this is 0% interest rate environment we were back in still in December 2021, but that news announcement on Friday then went into Saturday, and a lot of liquidations and dumps. Why? Well, the time I tried to tell people, look, it's looking like Bitcoin is interest rate sensitive. And I was told, no. Bitcoin is its own thing. It's going to destroy the Fed. The Fed doesn't matter. And then as 22 rolled on, the macro forces changed, and we saw here. So this manipulation, which was really just a low volume, illiquid move in price, it's really just simple. People pull their buy orders. It is a market order book thing. People pull their buy orders. People stop buying, and the price finds discovery to the downside. Doesn't mean that it's fake. In fact, it becomes very real, especially once you break that low. Once you break that low, once you break the low of a spike, I consider that to be, well, one should always consider that to be real, but that's a real thing. It's a real thing. And so while we're arguing still if the October the 10th liquidation was manipulation, that low was at 105. We are now at 90. It's not manipulation, it's real. And we're just going to look back in hindsight and see it that way, just like we already do now. And so it's all very, very clear to me. It's just that I don't go out and like start yelling about it, because anything can happen. I mean, you can get a nice little pullback up, but the bear cycle has begun. I'm just going to start saying it. I'm not going to hedge anymore. I'm not going to hedge anymore. Oh, and about the ETF. I like to do things really, really simple. I don't want to be confusing. I don't want to dazzle with bullshit like some people do. But let's just look at a Bitcoin. This is the all-time history index with TradingView, because I don't want to use any particular. But then let's bring up volume. Let's just put volume overlay here. Okay. Now, if we look at volume down here at the bottom, let's just sort of take a look at this price era right here. This is from May of 2022 until about March of 2023. Okay. This was basically, I believe, when I think that might have been, I don't remember exactly when they announced that they were going to the ETF, but it's before the ETF. The ETF was in January 2024. But notice something. Sort of a little box right here of volume. Okay, we could probably do a fancy indicator to like really kind of measure volume, but like there's like a big high volume there on the bottom, essentially. But that's about how much volume there was back then. Okay, now let's go take this box and let's go apply it to now. Very different volume scenario, isn't it? Now, I'm not gonna do a Wyckoff distribution and talk about this, but I just want you to kind of look at that. I want you to kind of look at the difference in volume from then to there. And now, to be fair, there's a lot more Bitcoin that can be bought and sold at a lower price. So there's probably math that goes into it as well. If you're talking about raw Bitcoin, so that plays into it. And also with the ETF, there's been a lot less on-chain activity. So that kind of plays into it. But, you've also had, high volume in the middle, and basically you have the least amount of volume now as any other time in the past. But there's one more thing, since we're talking about manipulation here today, okay? So what was all this volume down here? Obviously, people were selling. Who was buying? Who was buying so much Bitcoin down there at the bottom? Do you think it could be the people that were setting up the ETF? So there's a thing that I keep talking about when it relates to Bitcoin, or at least in the current cycle of Bitcoin, called the Faustian bargain. And this was as a story, as a legend of a Dr. Faust who sold his soul to the devil for earthly pleasures. And so when you hear the term Faustian bargain, it's basically someone selling their soul, selling out to the devil for one thing. In other words, selling the things that make you intrinsically you for otherwise getting some kind of gains. And I've said since the ETF launched that involving Wall Street was a Faustian bargain. It's been very well, I wouldn't say very well enjoyed. I mean, really, to be fair, if people bought at 40K of the ETF, they're only sitting in a little bit of 100% now, 2 years later. 2 years later. I mean, you could have done that in pretty much any stock, NVIDIA, Tesla, anything, Microsoft, Google comes to mind. Like, you didn't really outperform anything. And in the process, on-chain transactions have basically gone to zero. A lot of blocks are being solved empty. So nobody's using Bitcoin as money anymore. So for the purpose of number go up, they have traded Bitcoin's intrinsic value as an online currency. What has, of course, taken its place? That would be Monero. But remember what I say, don't buy Monero. Monero, of course, which has in the same time frame of the past year, just continued to go up. But remember, don't buy Monero, because governments tell you it's bad. Only criminals want a cryptocurrency that is by default private. So you don't want Monero. You do not want it. Ignore the gains that it has had. Ignore the fact that it's still the best asymmetric bet in crypto right now. In other words, a lot more upside than potential downside because people actually use it. But we're gonna go back to Bitcoin because that's what everybody wants to talk about. I'll just say it. This is what all this is. If I can find that text. You are exit liquidity. All your memes, all your groups, you are exit liquidity for the people that bought back at the bottom, created an ETF around it, and then got you to do their marketing for them. And now that's where you sit. All the narratives are done. You're not getting a strategic reserve, taxpayer bailout. Trump didn't put it in his strategic technological assessment that he released last month. MicroStrategy, I mean, they can still issue. I found out this week after they bought $1 billion worth that they can still sell shares. I thought they stopped that back in August, but no, they still left them the ability to do it if they needed to. They can continue to dilute shareholder equity to buy more Bitcoin. But what is the next thing that's going to pump Bitcoin? It's not money anymore. You've already given that up to Venmo and Monero. It only is valuable for a number go up, and you're not getting that. Now people think it's kind of a joke. It's sad. I've been in it a long time. It's sad to see what it's become. But people are still going to believe in it. I like the analogy that the Bitcoin maxis are like juggalos. If you don't know what juggalos are, I'm not going to go into it. But a very faithful fan base, we'll call it. They're never going to go away. So you're always going to have a floor. Bitcoin's never going to go to zero. You're going to have people that just refuse to leave. They're going to stay at the venue, hoping the band will do an encore forever. I'm very confident of that. They're just never going to leave the space. But that doesn't mean that they are going to convince other people to buy their bags. See, they always have this thing where, it's just math. The Fed is printing lots of money, QE is happening, all that sort of thing. It's just a given that Bitcoin is going to go to infinity because of fiat money printing. No, it's not just math. You know why? Because people have a choice. They can choose to buy your Bitcoin, or they can choose to buy stocks, which are companies, which are still ideas of value, but they're backed up by gainful, productive uses of capital, like producing goods and services and generating revenue, paying dividends, or real estate, which you can build a house on and live, or run a store on, or grow food on, or bonds, which the returns are not that great, but if it's a municipal bond or a government bond, they can always raise taxes to pay you, so they're never going to go out of business, theoretically. You have to make a case for people to put their dirty, dirty printed fiat that they earn into your digital collectible. And you guys have been assholes. You guys have been absolute assholes telling people have fun staying poor. You're going to get Bitcoin at the price you deserve. And your arrogance has been very, very off-putting. Now, there are people in the Bitcoin space that I love. They're very good friends, and I respect greatly. And I tell them all the time, I want you to be successful. You probably have enough Bitcoin, bro. Like, let's try to find some other things to put our money in. You're a smart guy. You're working hard. You're making good money. You bought a bunch of Bitcoin. You got the number that you wanted. Like, let's see if maybe something else we can put that money into. Okay. You don't have to sell your Bitcoin. I'm not saying that, but let's just see how this goes, because you're at the same point now as you were at 126. Okay. So let's just see where it goes. But by and large, the people on social media memeing every day, that kind of stuff just doesn't get rewarded in the history of finance, and Bitcoin's not going to be any different. So let's get off of Bitcoin. Let's start talking about some other stuff. Yeah, I mean, well, I, as a trader, Jeremiah, have been made fun of for trading, because clearly the best thing to do would have been to hodl Bitcoin all this time. But you know what? I'm okay with it, because I don't want to be like, I went to a buddy's house that had a Bitcoin price ticker, a little clock, a little digital clock in every room of his house, at least like all the living room, his bedroom, his office. Like, there's at least 3 of these in his house. And at the time, Bitcoin was at $111, $112. And I said to him, dude, that's not healthy. Like, you can't, like, I am set up. I trade ES futures. I trade stocks that I like. I look for setups in them. But by and large, I have found it so much better to stay emotionally neutral about the things that you're trading. And if you have built your whole identity around this asset and you're focusing on it every single day, you got an app on your phone that's telling you the price. Like, do I have an app on my phone telling me the price of United Healthcare? No. Do I have it telling me the price of Dollar General or Kroger or Eli Lilly? No. Or Tesla? No. I'll come and look at them whenever whenever I'm ready to evaluate charts, do a live stream or trade or change my position. But you can't live like that. And a lot of them do. And you know what? I did. I had an app on my phone that showed me Bitcoin. This was a decade ago, by the way. And I got tired of it. So I stepped off the roller coaster and I diversified into other things, less volatile things. Could I have had more? Sure. But I have enough. And now I can look at things a little bit more objectively and I don't drink the Kool-Aid as much. Will I buy Bitcoin again? I've been asked that. Will I buy it at 40K like I say? I don't know. I actually don't think so. There's too much manipulation by the people that have pumped this current cycle. And so if maybe if Sailor gets liquidated, maybe if they close down the ETF, we can talk. But yeah, too much manipulation. All right. Let's see here. Transition. By the way, if you guys have symbols to look at, I got a couple of things in here. Oh, we got some stuff to read. Let me catch up with chat because I've been talking for a while. All right. Swaggy T, did you write all that? Well, like I said, man, like, yeah, the government's printing money faster, but people have to choose to put their money into Bitcoin as opposed to putting it into anything else. It's not just math. It's not just a guarantee that they're going to be putting it into Bitcoin. Oh, it was copy and paste. I figured as much. Yeah. Yeah. Is it like a copy pasta memeing and stuff like that? Yeah. You bought well, did you follow me on the UNH trade? Let's talk about UNH. UNH is so aside from doom posting about Bitcoin, what I do is I try to trade good. All right. And the things that I like to trade, well, the things are broad, but the setups, the technical setups that work, I teach. So what I want to teach is the UNH trade today. All right. Or this week. Posted it on Twitter, posted it on Discord, all that good stuff, because it was just a great setup. It's one of these setups where I say it's a have to take. All right. I had to take it because it fit just about everything that I like in a good setup. They come around very rarely. And I've actually been on a little bit of a self-imposed hiatus for the last couple of months, just chilling. And now I'm coming back at the end of the year. I'm going to get really active in January. But let's back up. All right. So United Healthcare, multi-billion-dollar company. Earlier this year, in the first quarter, March, it tanked. On the first, 60%. Wow. And so, of course, I can't help but not get interested in that as a contrarian. And so I'll go to the first leg that I bought was actually all the way as a here. It was let me make sure this is precise. Precision is important. Okay. High to the low, like going all the way back to the 2008 low. Because what I try to do when I'm doing a 50% level is I want to encapsulate the whole trend. Now, some people might try to do the COVID low to the high. Not really the trend for me. I want the whole thing. I want the whole shebang, even if I have to go to the monthly and find it. But basically, that level came up to about 322, like there. So when we were trading it, me and some buddies in the chat, we tried to initially go in there, didn't work out. That's fine. The next level to look for is the volume profile level. That is basically back in 2008. Volume profile is an indicator where it shows you where most of the trading volume happened. And so when it did the second double dip down to 243, bought in again. Okay. That's all I'm going to give it. But I liked it because it came down to basically spike. In other words, it could have potentially been a false breakout, at least is what I was thinking at the moment, of this low. In other words, scaring people, making them think that it's going to keep going down. And so this is basically the last leg I hold. I'm trying to, it doesn't feel good. Like when you buy something like this, look, every time I've had a good investment or good trade, it never feels comfortable going in. You know, it feels comfortable buying stuff when everyone's telling you that there's an infinite money glitch and the price is already in a parabolic. I cannot make my fingers buy that because I know that's all BS. But I do the opposite. I try to buy when something looks like this, and it hurts, makes you feel bad. But that's because you're going against what everyone is saying. Now, in the week that followed, or week was involved, you found out on this big boop that Warren Buffett had taken a big stake in UNH, the great GOAT value investor. And so it's worked out pretty well since then. Fast forward to this week, the week of, I think it was, what day was it? It was this week. Every morning, well, when I'm not being super lazy, I do a scan in Thinkorswim for spikes. Now, the spikes I'm looking for are, I'm going to clean this up, by the way. We don't need to say all the passwords. So the spikes I'm looking for are false breakouts. Remember false breakouts? Talk about them all the time. Remember that false breakout on Bitcoin at 126 that caused the reversal? Well, you also have that happen very frequently on the 9:30 30-minute bar of stocks. There's also one in the Ethereum that we're going to look at for the FOMC. So hang out if you're glossing over because you don't like stocks, just hang on. And so this right here, if you notice that 322.62, that is the level from 2008 up to 2021. That is the 20-year 50% level. Okay. 9:30, December the 10th, 2025, it hit a 20-year level. Not to mention, it was sort of a 50% retracement inception. It was a 50% retracement inside of a 50% retracement of a recent trend, a recent leg up. And then I have this 9:30 spike. Oh, I could not take it. And so what I try to do is I set up a trade like so. Obviously, the bottom of that spike is going to be the stop. Now, I didn't get in at that level. I got in a little bit up here. I think I got in one more. So forward one bar. Yeah. So I got in on this bar right here because I looked at it about 30 minutes late. And then I'm looking, okay, well, let's try to get a 3-to-1 up to here. All right. And so the key things are I'm looking at it at a level. Not only is this a multi-decade level, this is a short-term level for the month of December, and it also at 9:30 spiked. It was also a very, very significant spike. You can see it. Let's kind of zoom in right here. I mean, essentially what you're looking for with spikes like this is you are looking for price to set up a little range, people to sell it off, and for it to get bought back up, basically trapping people in their shorts, in the case here, establishing a point where you know where your risk is, and that just sets you up to win. And it's also in a stock that I already own a good bit of, trying to play that contrarian trade. And of course, as we finished today, within 2 days, I was able to take off about an 8-to-1 risk reward on that trade. Does it happen like that all the time? Yeah, it does. No, it doesn't. But if it's a really, really good setup, yes, indeed you do. And one of the reasons I took profit is because it is, of course, 50% inception back up to the 50% of the leg down for the quarter. The October high down to the low of November, and then boop, price respecting that level, just like Bitcoin is respecting its level. So is it manipulation? Is it magic? Is it Maybelline? Maybe she's born with it. I don't know. No one's going to tell me. I just go on price action. I look for levels to respond. Oh, and by the way, false breakout. The most powerful sign of reversal. Do you guys see it? Do you guys see it? Do you guys see what I'm talking about when I talk about a spike where price runs up past a prior high or low, then in that same bar, maybe the second, but let's just keep it simple. In that same bar, closes back inside the range. Do you see that? And then the same thing happens here where you have price come down and then close back. So powerful, so powerful, so powerful. It gets me excited. It gets me really, really excited because it works so damn well. Hell, I've talked about this a couple back and forth, but you know, DXY dollar index. This is the US dollar itself across baskets of currency. False breakout that it did back in September. You know, one of the things that I was in that I got out recently is the USD CNH, the dollar Chinese yuan. That was, of course, another false breakout. These are weekly charts, by the way. These are not like 1 minute time frames. These are major signs of reversals. What was the Turkey ETF? This is another one I've been in for quite some time. Oh yeah, here we go. So this was a one from back in 2022. A little spike here. There was some kind of war, some kind of coup. I think this is when the Turkey was having the country Turkey, not the animal gobble gobble. But Turkey, the country, was having a coup, and they did a false breakout to the downside back in 2022, and of course launched up. These are weekly charts, by the way. You can find them on 30-minute, daily, and just look for false breakouts. But of course, that was a trade of the week, UNH right there. Oh, and as promised, on Ethereum from the high that set. Oh, by the way, Ethereum weekly. Remember when I talked about the little bubble, the beach ball? There's your high back in 2021. Remember when Ethereum was coming back, baby? Boop. August. Oops. False breakout. Of course, now you have this leg right here. Actually, it's a little bit closer right here. This leg down. Yeah. And then, boom. This was, I didn't take this because this happened, let's see, Wednesday after hours. I only trade Ethereum using ETHA options, and it already closed by then. Actually, I'm lying. I could have maybe gotten a trade. Well, hold on. I saw it after the market, but basically you had it's 3 o'clock. I guess I could have taken a trade. I don't know. But here's a 2 hour. At that level, 3,437. There is your spike. Here's what it'll look like in a moment. Yeah, I mean, you have price establish a high. This is from the FOMC on Wednesday. So not only did Bitcoin hold resistance there, Ethereum did as well. Stock market is just bullish AF. Actually, we do need to talk about the stock market because it didn't actually hold it, but stick with this. So, yeah, Ethereum did the same thing at a level. FOMC spiked out and down. Look for those spikes. Stock market as a whole, guys, get your symbols in, and we'll take a look at it here in a second. Stock market is just bullish. I mean, it's like a honey badger. It doesn't care. There was a spike on Friday that I noted. I actually played this down all the way through the FOMC and then let it go ahead and stop me out because it's in a leptokurtic pattern. What does leptokurtic mean? It means it's going, that's what a leptokurtic means. It just sucks. But really kind of unchanged. Man, it's just going to play games, isn't it? I think that the market is waiting for the real jobs numbers, the real economic data. That's what Jay Powell said on Wednesday, by the way. He said that he was waiting because the government shutdown kept this data from being released. They're going to be looking at that data to decide what else they're going to do. All right. No Second Best says going into 2026, I'd rather buy non-tech ETFs and hold. Thoughts? I agree. Now, I've said since the beginning of this year that the last thing I want is tech. Now, could I have made some money in tech if I bought at the beginning of the year? Yes, if I had held it all the way through April. But I just, yeah, man, like I'm healthcare. Healthcare has still been the most downtrodden. I still want more of it. But you know what? 2026 is coming around, and you're right to ask the question. I'll let you know. Every year there's a new meme. There's a new thing. And so we're just gonna have to wait and see. We'll wait and see. We'll find out in January. January is like the month to do everything. Trade, position. It's the best. It's either you're gonna be your best or your worst trading month. You just got to try to be really careful and make it the good one. But it's going to set you up for the year if you do it right. Always, every January. It's everybody's working. Everybody's working on the market. Year is a new year, new memes. So we got to wait and see. They will make themselves apparent. Trust me. Cave. Let's take a look at your symbols. PAVE. All right. Is my volume spike indicator similar volume spike I trade for? No, my spike is all price action based. I don't put any volume into it. The reason I don't use volume that much in my analysis, I use volume profile. That is a recent, as of like the last 3 or 4 years development, just because it's just so uncanny how great of an indicator volume profile is. But I don't really use it in my indicators because I started trading Forex, and Forex were notorious for being decentralized. In other words, there wasn't really volume that you could really trust. And then of course I went into crypto after that, and crypto was of course across lots of different exchanges with their own volumes. And so you could have like a lot of volume on one exchange, but not much on the other. And there weren't, when I started, tools like TradingView that aggregated price and volume together. I actually had to download OHLC data and then put it into a thing called Sierra charts to get charts of Bitcoin. I have to dig that up, but I don't have it right in front of me. But the answer is I basically learned to trade without volume. So I don't use it that much because I don't need to. I've developed methods that don't require it. Not saying that look, I'm all about people discovering their own way. I think you have to find your own way. Volume's just not something I incorporate. It's entirely my spike indicator, which by the way, if you want it, send me a message on Discord. I will add it. I'll add you to the list on TradingView. Actually, I had a request from one of my power users to rewrite the script to make the alerts work. Keep on me. Keep bugging me to do that, because it does need to be rewritten for whatever TradingView its current code base is. And now that's easy. I remember it took me a year to write that and perfect that spike indicator, coding it manually as an amateur coder as I am. But now I could just plug in a ChatGPT and I'm sure it would spit it right out for me. So yeah. All right. Let's see. The setting on the spike indicator is my default. Let's look at what it basically does is this right here, where it basically tells me an ATR clearance. The median is the red line, by the way. That is the Tenkan-sen from Ichimoku. That is where it is. And that's also where what I try to do is put in the entry. Actually, UNH is good. That didn't actually pull back. So that wasn't a great trade after all. But let's see, 3 minute, 30 minute. Yeah. So on the UNH trade, yeah, I know it's in that replay mode. What you would do, we know that it's at a level, okay. To set up a trade is we would wait for that to fire, and then 321.93, 321.93, close enough. That's going to be your entry. And of course, the little crosses are your stop, and 2 to 1, 3 to 1. That's what those are. And so, of course, that's the general premise of just the basic spike trade when that happens. Okay. Now, of course, I want to take this for more, but that was actually an 8 to 1, and not just a 3 to 1. But that's what the median is. And of course, the ATR clearance, ATR stands for average true range. What that is is a measure of, see this low right here to here? So this distance is 178% of the average to true range of 26 bars. Now, these are all numbers that you can mess around with, but the premise is just understand the premise. You want to make sure that that spike is a significant breach of the past lows. And so that ATR clearance is 100% would be an ATR. That would be about the average size of one of the recent bars. Okay. So now we have a bar that breaks that low by almost twice as much as the typical size of a bar. That makes it significant. Do you understand? Do you get that? So my minimum for taking a trade is 80%. Now I'll look for things that are like in the 60s because they can be interesting, like that Ethereum. But my rule is only take ones over 80%. And of course, this is 178% fit the rule. So when I do if I were to trade Ethereum, I would just use ETHA, and I do the options. I do puts. But as I said, it happened at the end of the day Wednesday. It actually didn't. I just saw it after the Wednesday close. And so I was just like, okay, that's interesting. But it actually didn't pull back. It actually did. See, did the 1 hour do it? Yeah, see, the 1 hour never even actually pulled back to entry. It just kind of went. So would have really gotten into that anyway. So yeah, there's the 4 p.m. And of course, it just went down from that. So yeah, it's just interesting to look at, but a good example of how significant FOMC was this week. I was on a call. I was on like a crypto call, and of course, at the end they're like, "What do you guys think? What's your sentiment?" And of course, they're like, "Well, I think we're up from here." Well, when your whole financial future is based around a single asset, what do you think your opinion is going to be? But I really think people are just ignoring the signs the market is telling them. Like interest rates were lowered. Okay. So money is now more available, ostensibly, and things did not go up. One thing happened, which would suggest cause and effect, but the cause did not make the effect happen. So that should tell you something. That should tell you that despite having a bullish thing happen, see, here's the thing you got to understand. When you're in a bull market and good news happens, price goes, woo, up. When you're in a bull market and bad news happens, price doesn't care. It either does nothing or it also goes up. Understand that. Now, when you're in a bear market, when good news comes out, bear market doesn't care. It goes down still. When in a bear market, when bad news comes out, it goes down. The sentiment of the market is what matters. And then each news event that comes out, you can then gauge what market are we in based on how price reacts. So many people get held up on, oh, this fundamental force happened, thus this. Like they're too much focused on causality. They think that if they understand every news event, they're going to understand where things go. No, because it's either already priced in or very often news reacts in ways that people don't expect. The only thing you should follow is price action because it's going to tell you what the news digested it as anyway. No one's going to give you the news ahead of time. That's insider trading. You can't do that. But by understanding that we had bullish news this week and price did not go higher, that's bearish. I don't know how more simple to put it. That's the way it's always going to be. You can carry that for years into the future. Just understand that the market's going to take whatever news and it's going to interpret it in what it already wanted to do. Bull market, good news, yeet. Bull market, bad news, Bear market, bad news, woo, down. Bear market, good news, It's just that simple. All right, let's get these symbols through there. PAVE. Global U.S. Infrastructure Development ETF. Okay. Is that what that is? No, oh, these are non-tech ETFs and hold. Yeah, I mean, I mean, you're not going to get much returns out of this, but if you're looking to preserve wealth, I think something like ETFs like this would be great. I try to focus on individual stocks, and I do have a lot of ETFs. You know, I actually back in October, I sold a lot of stocks so that I could buy a house, and yeah, I'm getting ready for that. And the hardest things to sell were the things like Palantir and Google. Now, they both got Palantir, I'm basically where I was in October. But Google, it's gone up about 20% since I sold it. So that sucks. But the ETFs, the tech ETFs I had that are just naturally ballooned to about 40% of the portfolio that they ran, they were very easy to cut. You know why? Because they don't have a personality. They're not like a thing I've tied my financial future to. They're not on my phone. They're not being memed about on Twitter. They're very easy to sell. That's one of the problems. Again, going back to Bitcoin and everything else, one of the problems is that there's no price that people are going to sell, whether it's high or low. So it's sort of like a philosophical question, you know. Remember The Simpsons? What is the sound of one hand clapping? You know, you're supposed to think about it, not do it. What is the value of something that you never sell? But ETFs, you don't care. They don't have a personality, so they're good for that kind of stuff. SHLD is tech defense. Ooh. The overall answer for no second best. I think if you're looking to get defensive, I'm not going to be mad at you. I mean, we're several years into a bull run, but bull markets can go on forever. In fact, more and more people all year long, for whatever reason, have been skeptical about this bull market. And I just go back to the adage: bull markets are born on pessimism, grow on skepticism, mature on optimism, and die in euphoria. And so we're not at euphoria because there's so much skepticism. So I'm just going to presume that the bull market continues actually into next year. We'll see what happens. When checking such a short time frame, 2 hours, the puts you take on or a short expiration, no, because in this particular case, if I had taken it, what I would have done is I would have understood that I am playing the daily 50% level. And so what I would probably do, I mean, short time frame is relative, like in options, right? I wouldn't take a weekly expiration, no, because what I'd be trying to do at this level, let's just say that price goes about this speed down, and so from that level, let's just take that line. And so what that would do is, like, for me to get to the bottom, it'd be January. So the minimum I would take would be a January expiration, which is more 1 month. I might even take a February just to give myself a little bit of extra room for time-wise. But yeah, I wouldn't take a weekly. Even though it's a 2 hour, I would be playing that level, which is a daily level, and I'd be playing this structure. I mean, you can see it, can't you? You can see that what you'd be playing here on that spike was, you know, here's the high, you came down, there's your structure, there's your pullback, you're entering. So you're playing basically back to the low. And so what you need is at least out to, you know, January 15th, the expiration. So even though it's a 2 hour setup, that's about how I would have played that. Does that make sense? Give yourself enough time when you're playing options. I mean, I had puts out to 2026 with MicroStrategy. I didn't need all that time, but I definitely needed some time because of what it did throughout the year. So, all right. I think that's, oh, here we go. OKLO. Oklo. What is that? 200 AMA. Yeah, it's close. You know what? That's actually, is that the 50%? Oh, it's a little below it. Yeah. I wish I want to find a good setup where the 50% matches with a 200 EMA. And I just want to take it and see what happens. Combine those things together. All right. I think that's everything. Oh, hang on, we got some tickers from T from earlier. Promise I get to them. RGTI. Do a little rapid fire. Rigetti Computing. I don't think I like this one because it's that's not good, because you already came down and you've already held the 50% from the top side. That's value of risk. I do not like that. Pfizer, always about healthcare right now. We got a lot of lines here. I've done a lot of analysis on this. Let me clean this up. Pfizer is looking kind of like a it's a knife catch, but let's just do this. Let's be real broad. Let's try to find our volume profile level for all this. I had some discussion with myself but everyone else on Discord about volume profile this week. Volume profile and spikes. The node that kind of sticks out to me is here at 2274, which it has held. But if I was being really, really, really bottom picking and trying to scoop up a bargain, I mean, I would probably see if we can't even get it down to 16 or 1394 at the lowest. That's where you're really trying to be a contrarian. So those would be my levels right there for that. It's either going to hold there. I'm not mad if you wanted to pick it up off that level, because it's already starting to show you a little bit up move. It is Pfizer after all. I mean, they make a lot of stuff. But if I'm going to be in a pharmaceutical, I want to stick with a winner, and that's going to be Eli Lilly. I was talking about this earlier this week with someone, and man, like the August pullback to the 50% at 640.87. Mwah. So I've been talking about Eli Lilly as long as I've had my Discord. It's a stock I've owned for way before I even started, doing a Discord or anything. And it just, every year it just goes up. And so this year you pull back to a 50% level. Yes, give me more. And then you proceed to do a rock solid example of a breakout. You even come back to test a little bit. I mean, hey, anything can happen, but I mean, I like winners. I don't like to go around. This is one of the things I've kind of ironed out of my tendencies. I don't want to go in a sector space. And my buddy Swaggy T, he knows what I'm talking about because he loves his cruise lines. I don't want to go into a sector and try to find the loser because it's cheaper. That's like one of those errors that people make in investing, where it's like they say, okay, well, I want to be in cruise lines in that case. And so we got Carnival Cruise Line. And granted, this is like, from like 2020. Okay, so 2020 happens, cruise lines drop off a cliff, they sink, to make a pun. And you got Carnival Cruise Line, you got NCLH. Actually, let's try to do this way. Okay, so after 2 years, let's do this. So let's do December 2023. Let's see if it'll hold it. Okay. So here's Carnival. Here's RCL. And then here's Norwegian. Okay. We got 3 to look at. Okay. So, and obviously I talked about this several times before. So after 2020, at the end of 2023, here's your Norwegian. It's 2 years ago, by the way. Here's your Norwegian. Here's your Royal Caribbean. And here's your Carnival Cruise Line. So obviously, of the 3, NCLH, Norwegian, is the worst, or basically the same as RCL. Okay. You're 2 years after, or so RCL is the best. Royal Caribbean is the best. It's done the best. It's recovered the best. Basically, let's do it by numbers. So, and this is in relation to Pfizer. So you're up 500% from the low of COVID on RCL. And on NCLH, you are up only about 100%. Still pretty good, but obviously RCL. And so the question is, which one do you buy? Do you buy the cheaper one because you want to be cheap, or do you want to buy the winner? And a lot of people, they think, let's buy the cheaper one. No, because you buy the cheaper one, in CLH, and at the end of 2 years afterwards, you're still only up 100%. RCL, which was winning, instead of being up 500%, now you're up 1,300%. Take this example and stick it in your minds when you look at a sector and you're looking at what company to buy. The human bargain-seeking mentality is, let's buy the cheap thing. You don't want to do that. You want to buy the winner. You only want to buy winners. Okay. So I think this has been a great example of that. And so when it comes to Pfizer, I had Pfizer. I sold it, I think last year, something like that, when it started doing this, or 2023. I did have Pfizer in a trading account because I think it did do a 50% pullback of its own. Yeah, back in about 2022. And then when about 2023, I cut it because it was breaking below that 50%. And so I have not looked back at it. Instead, what have I done? I have bought more winner. That's what you do. That's what you do. All right. Let's see. LIDAR, LIDR. Is that what it is? LIDAR? Or is it? Yeah, probably. I don't know. Ugh. This is one of those bubble watch stocks that we were talking about, MicroStrategy and Tilray and GME. I mean, $2.38. It's a fun ticket. I mean, I don't know what the stock is, but I like things with structure, with a lot of good past price history. That's just what I like. So, not my bag. ASPI. And unless we got something else. Was that the bottom of RCL? Well, 2020, I think was. All right. So ASPI, I mean, the first thing that strikes out to me on this one that's problematic is this, and you should see it too. This is a very obvious false breakout from back in October. That's I normally wouldn't pay too much attention to it because it is on the way up, but that's really significant. I bet we're going to be at are we at a 50%? No, we've already broken the 50%. That's no. That's a no for me. It's a no for me. Oh, UPS. Oh, that's an interesting one. Yeah, UPS has been kind of interesting. So let's see. See, I probably looked at this a little while ago because I've already got it marked off. This is another example, by the way, of what I call the value of risk, where you have a 50% retracement, where it came down 157, you had a little bit. And what I always say in these kind of cases are, it should have gone. Just remember that whenever you have like a 50% pullback and it comes up, it doesn't go, and it comes back, that's not good. You only want to buy winners, remember? And so whenever you hit a support level that may seem to be a good short-term entry, and then it fails, especially when it comes back, closes below it, holds it as resistance, get out, stay out of the value risk like this is right now. So, and a lot of people just hold. I mean, it becomes very, very painful. You don't have to hold. So as I've looked at this, honestly, I'm just a contrarian by fault. I don't want people to lose money, but when I'm going to put my money into it, I want it to be at the cheap price that no one really expects. And so I've got 73.10 still on UPS that I think it might come down to. It may not go all the way down there, but I should note this week. Was it this week or last week? It was last week. Dollar General been one of the best winners of this year. The reason I took it back in February, it hit its volume profile level from many moves ago, back in the 2014s. 71.51, picked it up. I waited patiently until it got down to the level nobody thought it could get to. And now this discount dollar store is up from that. That's the thing. When you get something really cheap, if you're that patient, when everyone else has decided this thing's dead, you're gonna probably get a good return back from it. So if you're going to catch that knife, I want it to be at like the level nobody thinks it can go to. So UPS already got that marked off. That is 7310. That's what I'm looking for on UPS. Again, may not get there, but that's where I would get interested. Well, all right. I also, well, I'm not buying AI, and I have sold some AI, but it's like I feel like I'm in contrarian Inception, Inception, the movie where you sometimes you're a dream inside of a dream. And hold on. So a lot of people this week on my Discord were talking about shorting Nvidia. Okay. And you go online and you see like Michael Burry, he's shorting Palantir. And so everyone is still bullish on AI. Like I get sent articles about these trading gurus that are telling people to get long AI. And so that's not what I'm going to do. And then now I'm starting to see things about people that are trying to be smart and they're trying to short AI. And so that's like, okay, I hear that. And then it's like, well, wait a minute. So, but everyone is long AI, everyone's smart is shorting AI. Well, then the smart thing needs to be is to long it. No, the smart thing right now for me on AI is just hang on to what you got. If you're not in already, you wait for the next meme. But I'm just going to hodl AI for now. Something will make itself apparent. I think there might have been a little euphoria this year in AI. I'm not totally convinced. I'm not buying any more, but I'm not completely liquidating out of it. So we'll see what happens. But we have, the 19th. Next week, I'll try to do a live stream the 19th. Definitely won't do it for Christmas, but I may be in a different location. We'll see. But if I don't see you guys until, wow, I might not see you guys till the new year. I'll try to get one in. I'll try. But if I don't, I hope you guys have a happy holidays and a Merry Christmas and a Happy New Year. And come back ready for January. Absolutely, I'll have one for January the 2nd, because be prepared. Like get exercise, get your workstation set up. I'm looking for a Christmas tree, but I can't find it that way. Get your workstation set up, because January is the month. If you're going to do anything, January is going to be the month to do it. So drawing a little Christmas tree. Merry Christmas, everybody. Happy New Year. And of course, trade wisely. Bye-bye.